Fact or fiction, Fannie Mae or Freddie Mac are basically saying you should tank your credit to get a better deal on your mortgage. Chad Helmcamp here with BWC Lending, here to tell you fact versus fiction. There are a lot of headlines out right now about Fannie Mae and Freddie Mac basically deteriorating the pricing for good credit borrowers and improving pricing for people with lower credit quality. There is some truth to it, but the way the headlines read would make you think you should actually work on deteriorating your credit score to get a better deal, and that's just not the case. Okay? At the end of the day, there are certain people in certain boxes that are going to pay a little bit more now than they would have before, and that's really with people with credit scores between 680 and 740. And then you have people with scores below 680 putting a little amount down that are going to see much better interest rates on their loan. However, what Fannie and Freddie don't tell you is that the mortgage insurance companies are still going to calculate their numbers based off of your credit score. And the higher credit score you have, the better off you're going to be. Just to add a little more clarity to what Fannie and Freddie, the changes they've made and how it's going to impact things, there is a handy little chart that we're going to put up right here, okay? And it's going to show you which areas have been improved and which areas have been deteriorated. So anything that's in red means that they have worsened the pricing. Anything that's in green means they have improved the pricing, okay? And everything on here is based in basis points. So if you see 0.75, what that means is 0.75%. And the best way to think about this is think about the loan size that you're working with. So if it's 0.75% and it's a $100,000 loan, that means it's going to be $75, okay? So I just want you to be thinking about that. And what I really want to point out are three columns, okay? Number one, for our high net worth clients, our wealthy clients, and our really good credit quality clients, people who are putting a large chunk down, I want you to look at the column that says 60 to 70. That means you're going to be putting between 30 and 40% down. You'll notice that if you go down that column, there is only one scenario where it's going to cost you more than it did before, and that's if your credit score is between 680 and 699, okay? But everybody else who's putting between 30 and 40% down is actually going to get a better rate or better pricing today than they did prior to May 1st, okay? Then if you look at the column between 80 and 85%, you'll notice that this is where the most red exists, okay? And that's for people with credit scores from 680 all the way up to 780. In every one of those scenarios, it's costing the client a little bit more. The reason I want to talk about this column is this is with people putting between 15 and 20% down. I've been doing this for 20 years. In my experience, not many people fall into this category. Most of our clients are putting between 3 and 10% down, or the opposite, between 20 and 30 or even 40% down. So I don't think that this particular column is going to impact a ton of folks. Not saying it won't impact some, but it's not a lot. And then lastly, if you look over here on the far right-hand bottom quadrant, that's where you see the most green. And these are the people with the lowest credit quality and the lowest down payments. And right at the very bottom right, you'll see 1.75%. That is a huge, huge improvement to their price. As far as an interest rate's concerned, you're talking about their interest rate improving by about 0.5%. But as I mentioned previously, the mortgage insurance for this client, putting this little down with credit scores like this, is going to be very, very expensive. Typically on a conventional loan, it might be as much as 2% or more, whereas on an FHA loan, it's 0.55%. So most of these clients are going to end up going FHA anyway. I say all this to simply say we can debate whether or not any of this makes sense. And trust me, everyone in the news out there is trying to debate it. In my opinion, I think the intended impact is not going to be felt, and they are end up hurting more good credit quality people than they are helping the lower credit quality people. I want to show you what an average purchase price or average purchase in Houston, how these Fannie Mae and Freddie Mac changes are going to impact an individual borrower. To the right, you're going to see a $400,000 purchase with a 5% down payment, so a $380,000 loan, okay? And really what we have in the quotes here is how much this is going to impact people. People with a lower credit quality, so ranging from 660 or 620 all the way to 679, they are going to save on average in fees $3,800 to $2,300, or call it $2,400. Okay, that's how much their situation has improved. Then you go to people with what we consider better credit quality, 680 and above. Someone with a 680 to 719 score, their situation is actually going to cost them a little bit more, so about $475. Someone with 720 to 759, they're impacted the most. It's going to impact them by about $1,425. 760 to 780, $950. And lastly, the 780 folks, it's not impacting them at all. Okay, so the new tier is 780. Everybody wants to be striving to have a 780 or better credit score. In that situation, you're going to feel virtually nothing with these changes. If the client doesn't have those additional funds to pay at closing, the $500 to call it $1,500, they can always increase the interest rate. And as I said, you can see the monthly payment goes up by about $30 a month. So these changes are about an eighth in rate, and that's going to increase their payment by about $30 a month. And for those people who are on the lower credit quality tier, what I think you're going to find is when we do a side-by-side comparison between FHA and conventional, the FHA mortgage insurance is going to be substantially lower than for those with lower credit quality. The scenario I worked up the other day showed that the difference in mortgage insurance was over $400 a month. So I don't care if the interest rate with Fannie Mae is that much better, FHA is still a better deal for most of those clients. But if you've got questions or have specific concerns, feel free to give us a call. We're happy to work up the numbers for you directly. Have a great day. Take care. BW, see you later.
I belong to you.
I belong to you.